which were the segments that it largely came from?
In the first place, season's greetings to all of you and to all of your viewers. So if you look at from an ICICI Lombard standpoint, I think what we have been talking through is growth seems to be coming back. And that's exactly is indicative of what you rightly mentioned. I think even this quarter, we have had an outperformance related to the industry growth. We had a growth of 17%. Industry growth in quarter two was 10%. Largely, I would say the growth has stemmed from a couple of key preferred segments for us. One is health, and the other is the commercial lines portfolio, which spans across fire, engineering, marine cargo, liability, and so on and so forth. Insofar as motor is concerned, I think we still look at the segment to be a little more competitive. Hopefully, we should see aggression getting played out over the next few quarters. But primarily in this quarter, a large part of the growth is driven, as I said, from health and the commercial lines portfolio. And within that, I think the health retail segment, which is an area where we have been investing in expanding distribution, that has done exceedingly well for us. When you look at quarter two numbers on individual or retail health, that number is about 15.8%. But just for the month of September, we have actually grown at about 21%, which is in fact faster than even the standalone health companies, which have grown at 19%. So all in all, I think a great quarter for us in terms of growth, and the momentum looks quite positive as we look forward.
Talk to us about premiums across segments, because we've seen a phenomenal growth in crop premiums, up a solid 322% on year. That's followed by health, marine. Motor premiums have remained a little bit soft. Can you give us more insights and walk us through what your key focus areas are going forward?
So let me address the last part first. I think if you ask me in terms of our preferred segments at an aggregate or maybe at a broader level, it will continue to be focus on motor, health, and the commercial lines portfolio as such. So those will clearly be areas of opportunities as we see even in terms of the way forward. Now, but within that, if I were to kind of break down each of those portfolios, let me take up the health piece first. As we all know, health has primarily three segments. So far as individual health and the employer-employee portfolios are concerned. And then, of course, we have the government-sponsored mass health programs. Insofar as ICICI Lombard is concerned, which is what I was just mentioning, I think we have been continuing to look at expanding the retail health distribution franchise. And extremely happy to note, as I mentioned just earlier, I think the growth on that is looking extremely positive for us. So hence, that is one key driver of growth in this quarter as well. And we are extremely kind of looking forward to maintaining similar levels of growth as we head into the subsequent quarters on the retail health franchise. Even corporate or employer-employee portfolio is doing quite well for us. Even there again, we have kind of exceeded or rather outperformed the industry numbers significantly. And that will again continue to be an area of opportunity as we look forward. And when you look at the group health portfolio, it comprises of one, what I just mentioned, which is the employer-employee segment. And the second is a business that we do through tie-ups with various financial institutions. That could be banks, that could be NBFCs, housing finance companies, and so on and so forth. And given the fact that there is clearly an increased levels of disbursements that are happening with each of these institutional tie-ups, that is also aiding significant growth on the group health portfolio, which is other than the employer-employee segment. So that's again kind of doing quite well for us. To your point on crop, you are absolutely right. Crop has definitely seen a meaningful increase in the overall numbers. But having said that, what we have been talking through is when you look at it more on an annual basis, the extent of premium contribution of crop to the overall revenues is expected to be within the threshold of the 5% number that we have spoken about.
Okay, but health has continued to remain in focus as well, especially with health premiums, which have seen a healthy run rate in Q2 as well. Help us understand how trends are shaping up when it comes to the health vertical. Is there a lateral impact of inflation in this space?
No, that's the part of the question is very interesting, and maybe I will address it separately. But coming back to your growth point, I think as we all know, maybe thanks to COVID or even otherwise, health as a segment is significantly underpenetrated when you look at retail health penetration in particular. It's a single digit penetration is what we have as a country as a whole, which has roughly close to, let's say, 1.3 or 1.4 billion people. And therefore, the opportunity in that segment is significantly humongous. And that's an area from an ICICI Lombard standpoint. I think we have been, as I said, investing in expanding distribution and product portfolio expansion as well. So hence the opportunity is immense. And again, thanks to COVID, maybe the pace of acceleration is far more faster. And today, possibly when you talk to a lot of people, everyone is talking about either the need to have a health insurance cover, or even for the ones who had a health insurance cover, they are looking for making sure that that coverage is adequate. So that gives us an opportunity for maybe upselling the extent of incremental coverage that one can take insofar as health insurance coverages are concerned. So overall, I think that's an area where definitely one sees a lot of potential in terms or maybe room for growth. And that's where, as I mentioned, we have been investing, one, in expanding distribution on the agency front. Two, we have, from an ICICI Lombard standpoint, we have been significantly also embarking on promoting our IL Take Care app proposition. Now, that's something which we have seen excellent outcomes in the form of downloads that we have seen, particularly in this quarter. I mean, on a year-to-date basis, I mean, as on September, we have almost close to 2.7 million downloads, of which close to almost 1 million downloads is what we had seen in this particular quarter. So again, we are quite extremely excited with the way how things have played out on the IL Take Care app platform. And overall, I think the growth momentum and the growth opportunity on the health side is extremely positive, and that's a segment where ICICI Lombard is significantly investing on. To your second point on, are we seeing any element of health inflation? Absolutely. I mean, that's something that we have been talking through.
Okay, and your combined ratio is nearly stable on a year-on-year basis. Can we expect it to trend downwards from here on? Also, if you can throw some color on the claims ratio as well, what's the status now? Give us the insight when it comes to total claims picture.
So maybe let me answer the first part. So your point on combined ratios, yes, absolutely. I think that is a directional effort that ICICI Lombard is looking at. Even at the time, which was this couple of years back, what we had indicated when we announced transaction of integration with Bharti AXA, we did indicate that combined ratios will stay elevated for a couple of years once we get all regulatory approvals in place. And two, and that's kind of played out very well insofar as the completion of integration is concerned. Secondly, what we had also indicated is we would obviously want to stay invested in building our digital distribution, build our retail health agency distribution, and obviously try to create excellence in customer service and related capabilities. Now, what happens when you are in the path of expansion of distribution, whether it is health agency or whether it is digital, all of these costs come to you upfront, whereas the benefit in the form of revenues will play out over a period of time, because as distribution starts to scale up, you will obviously see incremental revenues getting played out insofar as top line growth is concerned. So hence, to that extent is what we had indicated, at least for the next couple of years, which is the current year as well as for the next year, we will continue to see maybe combined ratios stay a little elevated, closer to about 104% or thereabout. And thereafter, obviously, we would want to see a declining slope insofar as the combined ratio outcomes are concerned. So hence, the trajectory combined is something that we would obviously want to see an improvement, and that's what we are kind of working towards in terms of efficiency and productivity. Just to give a small data point in terms of how things have played out, not just for 1 year, over the last 14 years, our growth in profit after tax has compounded at almost close to 20%. So that's obviously, and our headcount productivity efficiency is something that, again, over a similar period, we would have seen a headcount productivity efficiency of almost close to 15% CAGR over the last 14-year cycle. So that's clearly an area where we significantly invest on, and some of the investments, as I said, currently is obviously getting expensed upfront. Once the revenues get played out over the next couple of years, we should be able to see a declining trajectory on the combined ratio front.
Thank you for taking time out and walking us through your growth parameters. That's the word from ICICI Lombard. They've